Wednesday. What's up, everybody? Wednesday morning. Welcome to today's edition. Daily market commentary. Hope you guys have a phenomenal week going so far. We've reached hump day. Markets gave us a little pullback yesterday. We like to see a little pullback when we can get it. We're going to take a look at our four major markets today: S&P, NASDAQ, crude oil, and gold, and then take a look at our stock of the day. So let's get started with the big picture. So kicking it off first with the S&P, looking at what we had seen from Monday, we have a really decent supply level up here. Now, the downside of this is that it's right near the all-time high. And so we have a little drop base, a little bit of a drop. It was a prior area of resistance in the past. And so clearly, if we make it back up to that region, then our 4-hour uptrend will have continued. But we could see a little bit of a pullback on there. I was looking at this last night in our tactical reinforcements class, and this is a deep retracement on the 78.6 retracement line of this most recent pullback. So if I just throw my Fibonacci's on here, you'll see that this lines up almost perfectly with a 78.6 retracement. And so, is that a normal retracement? I mean, it's not one that a lot of traders are jumping towards, but it does tell me that I would be a little bit more interested in this if price does indeed return back to that level for a potential reversal. Now, I will say today's pretty pivotal because if we're unable to create a new high, then the question would be, do we create a new low? And if we create a new low, then we switch our trend direction. So today is kind of an important day, and specifically, I want to pay attention to what happens relative to the Globex low that we have seen put in from last night. Do we drop below that Globex low? Now, if we do, there could be a little bit of a bear trap there. So I don't know that I'm going to get short on a breakdown of the Globex low unless I get really, really good quality basing. If I get really high quality basing below here, then I might be interested in doing it. But it's got to be basing sideways before the level for a few candlesticks for me to be interested in doing that. As far as a long position goes, I don't have any quality areas of demand below me to really jump on board with. I mean, when I really dive into it, nothing that was formed yesterday. We've got a slightly unbalanced wick over wick, but it's just okay. On the 15-minute chart there, though, that wick over wick looks to be a bottom that was already retested. And so then we moved up, and then it was already retested again here. So I don't like it as much when I go to a 15-minute chart. So that means I've got to look a bit lower. And as I look a bit lower, we come into this area way over here, which is a drop base, very strong move away, formed at a pretty good time of day, right at the London Open. And then from there, you come into this level over here on the hourly chart at 43.86 by 43.74. Now, I'm okay with those with being patient and waiting for a demand at that lower level. When I look at this from a daily chart perspective, where would that put me on some sort of a pullback? Well, that would put me at about a 3% pullback from the high, and it's a prior area of resistance on the daily chart. So I actually am, I'm kind of rooting for a slightly deeper pullback into this region because that to me looks like the better reversal opportunity. Next, let's look at the NASDAQ. So in our NASDAQ level that we looked at on Monday morning, hopefully those of you that were here with us on Monday morning were able to take advantage of some of the movements that we had. We did come right back into the supply level that we talked about on Monday morning and got a really strong move away from there on Monday. Really, really a nice trade away from that level. The next level that I'm looking at on here, if I look at this from a pure 15-minute perspective, is this area right here, which was the origin of this very strong move down. So I'm going to wrap that one in a purple line. Remember, 15-minute levels are shown as purple. And then if I go to the 60-minute chart, the 1-hour time period, we had this level of demand that we almost touched yesterday. I mean, we came so close. And this level was identified in our live trade room by one of our instructors, Herman. He identified this as a decent turning point, and it was. But because we came so close to it, I want to move. I want to get rid of it at this point. Only because if we come back down below that low, I think we're going to trade significantly lower. And the area would then be somewhere down in here. Now, from a percentage perspective, that would be about a 3% decline in the Nasdaq. So, you're looking at this as a potential. Are we getting a little bit of a pullback? We are seeing for sure on the daily chart slowing momentum, right? No question, we're seeing slowing momentum on the daily chart. And so I am paying specific attention also to the Russell to see what the Russell looks like. Are we going to stay above some of these areas in the rut? And you see that we actually pierce through some of those smaller Russell time periods. We hit the first level, which actually worked out really well for a nice little 2-to-1, even a 3-to-1 on the first level there. This second level, we hit it and got 6 candled out. So 6 candle rule comes into effect. Remember, if it has a major move in 6 candles, get out of the trade. And so now I think the Russell is actually the one that's sitting on a potential breakdown right below here, even better. Now, if the NASDAQ follows the Russell, like we talked about on our weekend review, that's what I'm going to really pay attention to. So actually forming a little bit of a tweezer top at this point right here. Let's see what this looks like when this candle closes. Next, crude oil. So crude oil also on Monday, we took a look at our Sunday night move off of this trade all the way down. So that one we got to remove. And then Monday, we looked at this area of demand right in here, got a little bounce off of that demand level, and then it moved into the next supply area and sold off again. So it's just kind of been bouncing between smaller time frame areas of supply and demand. Looking at it on a 4-hour chart, what do we see? Well, I see a pretty large descending triangle that's forming. It's probably even easier to see on the daily chart. I mean, you're getting lower highs, roughly the same lows. That means that this is a pretty strong possibility for a breakdown. So what I'm going to do is I'm going to remove some of these other lines that are here because I think there's room for price to fall if we do break down from this level right in here. And then last and certainly not least is gold. So gold came into our supply level that we had talked about, last week sometime. And, we say speed candles tend to get retraced. We did get the retracement. We got a little move away, but it only moved away to the opposing area of demand. And once it moved to the opposing area of demand, it bounced off of this level, and then we got another move away from that zone. So now this 60-minute supply has still held. So when I look at this on a bigger picture, I'm going to put a line right here. And the line I'm going to put right here is old support oftentimes acts as new resistance. So if we break up above that line, then I think we could see price move a bit higher. That's the line that I'm looking for from a resistance standpoint. As far as a demand area for a reversal, as I look at this, I don't really love a bunch of these demand areas. I mean, we still have these two way down here, but those are fairly far from current price. I'm actually okay if you want to be a bit aggressive and go after a short on here somewhere up in this region, knowing that our 4-hour trend is still indeed up, but definitely waning and slowing up a little bit. So overall, once again, and I say this, I feel like I say this every day, but I say it every day because it's such an important thing to remember. Don't force it. If it ain't there, don't force it. Wait for price to come into your zone, come into your level, and then take the trades as they show themselves. But I think that today's a pivotal day in a lot of our markets because if we start to put in a lower low, then we could see price move. So take a look at a stock of the day. Stock of the day is Square. Come on, you crazy Square. I'm looking at Square as a potential reversal candidate because of our upward sloping trend and our pullback to a rising trend line in the context of a bigger picture uptrend. Now, I will tell you, I'm a little concerned with all of these upper wicks telling me that there was a fair amount of selling pressure. I'm always concerned with selling pressure. However, I do like that yesterday when the market closed down, this one came back up and gave us a reversal doji pattern. And so having a reversal doji pattern is a pretty telling sight. when I look at the volume from this, we can see that our volume yesterday was a little bit increased from the prior 2 days. Now, why is that valid? Well, it's valid because our volume was a little bit increased, not from the prior one day, from the days before that, on a reversal candlestick pattern. Now, it does not mean that I'm ready to get long today, right? I'm ready to get long if we get higher than yesterday's high. Okay, if we were to get higher than yesterday's high, and then how do we play that? Well, the way that we play that is that our implied volatility is in the low point of the range for the last 1 year. We do a 1 year implied volatility look back, and so, but it's still at 44, which is a pretty high vol. So I think a bull call spread makes the most sense when looking at square. And if you decided that you wanted to look into that, maybe even out to the October to allow it to run for a little bit, remember we need a net delta of 25. So if I do the 260 by 55, 260 by 290, the 260 by 290 gets me a net delta of 2574. With a $30 spread and a $10.90 debit. And so in this case, by the way, if you do that, your stop goes below this low. So right there at about 257. So you're looking at a stop loss of right around this price point in here. And so even if you're in that trade for a couple of days, because you wouldn't be in it for long before you'd get stopped out, gives you a full week to be in the trade, you're risking about $130 roughly on this position. But where's our overhead? Where's our upside target? Well, the cool thing about this is because we continue to set new highs, I think that if we're able to get that next leg up, the market gives me the next leg up, then I think that this thing could easily get to 300 or even 320. And that's why I'd go with a little bit longer term position. And if you get this thing gets up even to 287, you've got about a 4-to-1 reward to risk, even if it gets up just to 287, which is below the last high that it had put in. So I feel like this has some legs in it and some potential. Just be aware of what's out there and what you might want to trade. So as we do every day, hopefully you guys have any questions, you send us an email, support@tradersarmy.com. You guys have a phenomenal day. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.